is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate the growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off, and we got markets in the red this afternoon on Tuesday, but we've clawed back a dramatic amount of losses right now. You have the S&Ps negative by 1/3%, 0.3 in the red, trading off by 23 points at 66.68. We had lows out here, and we did it with some volume. Okay, you check out that volume. Now, this is a 5-minute bar. Tell you what, let's put it on a 10-minute. And you look at the acceleration we had today. You actually got buying, right? Look where the volume. It came in at the lows, but each time you finished a little bit higher, I was looking, than the previous bars. Nonetheless, you're talking about an S&Ps right now. Solid 70-plus points above the lows, 66.66. How about that one for you? NASDAQ 100, tech stocks under pressure right now. Amazon, Microsoft as well, NVIDIA, their numbers this week, tomorrow after the bell. NASDAQ 100 was down to 24,376. We're down by 0.6% right now, off 156 points at 24,722. The Dow off by 0.7% in the red, off 310 points at 46,357. You see the acceleration beginning at about 12:30 for the Dow to higher price, and the Russell up by 0.7% right now. And yeah, a big component, folks. How about this when you look at the NASDAQ 100, right? The biggest tech companies out there. NVIDIA down 1.5. Microsoft off 2.5. AMD 3% in the red out there. Amazon down 3.1%. Pinduoduo down by 7%. Tesla off by 1% right now. Lam Research off 1.9%. You jump over to Oracle in the green, actually, up by 0.7%. All right, we jump to Home Depot. Their numbers. And yeah, some tough numbers, and you're coming down near the lows right now for Home Depot. Down by $16.84, off 4.7%. And you jump to some of those Home Depot numbers. They cut the forecast on weak demand for big-ticket items. There's a couple of items they talk about here. It's not just one thing or the other. The insurance season, the storm season. Okay, people don't have to replace as much as they have to usually on years when we did not have a bad storm season. In Florida, nothing came near us in Tampa. But yeah. Talking about the numbers, they talk of a frozen market. We had expected demand to begin accelerating gradually in the back half of the year as interest and mortgage rates eased, but what we see is ongoing consumer uncertainty and continued pressure in housing disproportionately impacting home improvement demand. Yeah. They expect their adjusted earnings per share to decline 5% from a year ago. The company said its profit and comp sales came in lower than expected in the quarter, citing overall weakness in the housing market and a lack of storms that hampered demand in roofing, generators, and other categories. Down by 5%. You take a look at this chart in a longer-term perspective. Now, that line that's there, you got to go way back for that one, okay? Just kind of a trend line from the lows of 2011. But we just take a look at a shorter-term look on this thing. And you're coming into this bar from the tariff lows. That's all. That's the only thing standing in the way. You got 325 out here, which is the lows of 2024. On a volume basis, you're going to destroy the volume on a weekly. It's only Tuesday, and you've already done 12.3 million shares. You're breaking the lows, and you're going to do it with volume. It's only Tuesday. So Home Depot under pressure. On the flip side of that, Meta. So they win their antitrust lawsuit. Talking about Instagram and WhatsApp, talk about rewinding the clock, that we're still litigating their acquisition of Instagram. But that's what's going on, and Meta wins it. The FTC antitrust trial over Instagram and the WhatsApp deals. And one thing they said in here, failed to prove, this is the Federal District Judge James Boasberg in Washington said the FTC failed to prove the deals allowed the tech giant to illegally monopolize the social networking market. I found this interesting. I'm going to read it to you. With apps surging and receding, chasing one craze and moving on from others, and adding new features with each passing year, the FTC has understandably struggled to fix the boundaries of Meta's product market. He knows that there's more that the FTC could do to rein in them a bit, but then he goes on. There could be a but. Whether or not Meta enjoyed monopoly power in the past, though, the agency must show that it continues to hold such power now. In the court's verdict today determines that the FTC has not done so. So they don't hold that monopoly power right now, even if they may have used it in the past. And yeah, they respond gleefully, but you kept the acceleration, and that's where the news hit at about 12:30. There's your acceleration on volume, and Meta trades higher with the market. You're down by 0.2%, but Meta's been under pressure recently as well. You check out this selling off their last earnings. You've eased up a bit each week, but that is some selling, folks. And where's this thing going to find a bid? Because look, you look at the selling on a daily basis, sustaining versus anything we were doing. Most days we were doing, 6 million shares, 7 million shares. The norm recently has been above 20. Look at these days, 23, 29, 24, 21, 27. Right, we were doing 9, 8, 7 all of October. So we have some selling going on in Meta right now. They catch a reprieve today as, they win it with Instagram and WhatsApp. And realistically, he knew they were a huge competition, man. And, back then, though, that was a big gamble. And that gamble paid off in spades, as my dad would say. All right, we take a look at yields in focus. That's your weekly. You take a look at the daily. October 17th, you're all the way up to 114.02. We've backed off as higher yields have crept in. The expectations of a Fed cut in December, lightning to put it lightly. And intraday, quite the reversal here. When the market sells off, yields are where investors are hiding on a risk off right now. And when the market reverberates to higher, they're selling fixed income, they're buying equities. Yeah, 4.12 on the 10-year right now. 4.12. The dollar with some strength, up to 99.65 earlier. We're back into 99.54. Quite an acceleration, but you give it back. And gold, quite the resurge from overnight lows of 39.97. We're trading at 4,075 right now. Check out Warner Brothers Discovery. So news out there, the Paramount Skydance, they're going to make a bid. And it's going to be a big number. Yeah, and it's going to be backed by Saudi money. Why not, right? So that accelerating higher. So what was it, 71 billion? Yeah, 71 billion. That they are prepping a $71 billion deal for Warner Brothers Discovery. With 3 Arab investors. Now, this thing was just trading at $12.50. How many outstanding shares you got? 2.5 billion shares outstanding. Whew. All right, folks. Markets in the red. S&P's off by 25. We're coming back with our man, Basil Chapman. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky.
Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps off by 25 points, NASDAQ 100 off by 158. And right now, folks, we're going to jump over to our man, Basil Chapman. Folks, Basil's program, the Tiger Technicians Hour, every market day, 10 a.m. till 11 a.m. Eastern Time. And Basil's outstanding opening call newsletter, folks, you can check that out right on the front page of TFNN. You'll see the opening call by Basil Chapman. Hit that button. You can read all about it. You gain many webinars when you sign up for this, folks. They all are subscriber webinars that are free for subscribers. You can sign up for $149 for a month. You can sign up for $695 for 6 months or $1195 for the year, saving more than 33%. And they all come with a 30-day money-back guarantee, folks. So you sign up, you get to try it for 30 days risk-free. You get to watch all the webinars, and then you decide whether you want to keep it, and it's perfect. Basil Chapman, good afternoon.
Hi, Tommy. How are you?
I'm doing great. How about yourself, man?
I'm doing well, thank you.
I appreciate you filling in for me when I was gone, Basil, and I was up there for one day in Boston and a quick weekend, but I got to enjoy some of that beautiful, cool Boston weather.
Good weather.
And, of course, it was a quick one, but back in 82-degree Florida weather right now, which is amazing. But I love that Boston weather, man. It was a great weekend.
Good.
So what are we looking at this market, Basil? We got some volatility, that's for sure. But what are you seeing in this market, please?
So, you mentioned volatility. One of the things that's been very intriguing is that every day for the last, 3, 4, 5 sessions, we've had a very good rally. And then the market, certainly the Dow's been very weak. Wait, did I forget something? I think I forgot something. Did I? I just did a little ping. Let me just check.
If you could just repost your chart, and I heard it. You had your chart in there, but if you could just unpost it and post it one more time, I think it's just sometimes when posting it causes a problem, but I don't think it's pulling up right now. That's all.
Okay. All right, let me just do it. It takes 1 second. Oh, wait, have I lost that? Oh, did I
get
do
it
something?
up there?
Hold on, I'll be right back. Meantime, let me just I'll talk while I'm saying that. Looking for this. Let me just find my...
And while we're waiting 5 seconds, folks, you can head over to the front page of TFNN and check out that opening call. As I mentioned, many great webinars that you gain access to as a subscriber of the opening call in there.
Okay, so I'm getting it up right now. Oh, it was there, and I just moved it around.
Yep, you just got to close your screen, Basil.
Okay, I'm getting off it. There we go. Stop streaming. We'll do one more time.
You got it. Perfect.
There we go. Screen.
And we're coming back.
And go live. All right. So let's do this.
Fantastic. Go for it. We got you.
So I'm always looking at peak Ds in the Chapman wave. The fourth highest peak, the objective in a buy signal to upgrade to a buy mode is to get to at least the fourth highest peak. A is the first, B is the second, C is the third, fourth is D, and that's where other things can happen. So you saw at 48,431 on the 12th of November. We went to that peak D, pulled back sharply, and we've gone from 48,431 to the low today of 45,913. But what's really interesting is that the weekly chart went to, there's a technique that I use where I draw trend lines, and if it's a very narrow trend line, like a little mini channel, I call that the inside track repellent zone. You can see how it worked here in the Dow. It went above it, then it came down, and we had the support level, and it took it out. That's the daily chart. But look at this weekly chart. It went right to the edge, to that green top line, and now we pull back, and what do we have? A really good chance. It's only Tuesday. We've still got Friday to go, but I don't think we're going to get to an all-time high of 48,432, 1 point above. So I think we're making a potential peak D. Now, there are a lot of support levels, but the most important thing that I'm looking at here is that we've been talking about for some time that this is going to be a very choppy month. And one of the techniques that I had and that I've used for so long, and I've used it again, is that I talk about earthquakes and aftershock. Sometimes the aftershock is less than the earthquake. Sometimes it's the same. Sometimes it's even higher. And I like to look at the market the same way, that I get internal highs, and then there's a residual high. It could be higher, lower, but at that point there's now weakness in the technicals, and it's the same thing at the bottom. You get an internal low, and then you get a residual low, and we've had that before. But I'd spoken about this when we were at 48,040 back on the 29th of October. I said, I think I've got an internal high. The 9-period moving average is still very strong above the 14. And I think there's going to be like an M-shaped pattern. I'm going to get a residual high. I'm not sure it hits this up-channel trend line, but if it does, I suspect that's where we get the turnaround, and that's exactly what we've got. So I use this for two reasons. I call it the dark news cloud cover, and each one of these little white rectangles represents a moment where it's either interest rates or it's something, but there's something that the market has either ignored, but now it's starting to take seriously, and you can see that it's taking it very seriously here, because for the first time we've broken this up-channel support line. So then, So we've been raising cash, we've got positions that we're still keeping core, very small position from much lower down. Robinhood's an example at 16 and went all the way to the 150s. We would like to enter trading positions in stocks that we own or ETFs that have really run to the upside very, very well, given us really good profits. We've taken a little bit off, and now we're waiting for this pullback to be starting to add. And we'll see what happens over the next. Now, I was asked this morning if I would do the symmetry that I call bar symmetry, where the number of bars on the left side from a high come down to a bottom, and then you expect the same number of bars to go up to test that high. And it could be the inverse, where you go from a low to a high and then back again. In this case, I was asked about the volatility index. Do I have something in the way of timing for the volatility index? And I said, yeah, I've got something, and I'm working on it, and here it is. So this is, I don't use the Chapman wave notation in the volatility index because it's a sentiment. It's when everyone, usually you make bottoms in synchronicity right at the bottom. All the charts come to a low, but tops kind of get spread out. So I've used this in terms of using the high that was made on the 17th of October, 28.99, where it was the regional banks. It was that moment that the volatility spiked up because of the regional banks. Everyone thought they were going to fail. Anyway, we survived that, and we came down. And what I've drawn in from the high that was the airline cuts and the government funding. See, funny how everything just disappears and we move on to the next thing. Right now, I've called it everything else. Anything that's not airlines or government funding, we're worried about it right now. And I think interest rates is a little bit there as well. So I've drawn the left side, right side price time match to the high of the 17th of October to the peak of on the 7th of November at 22.72, and it comes out to the 28th of November. And today we just hit this Chapman wave inside track resistance. This is called the target resistance line, dashed line green. And it says that there's a chance. It doesn't give you the price, but it says that we should go towards the 28.99 high of the 17th of October, around about the 28th of October, which is interesting because as I was doing other work, it also suggested that there's a good chance that if we close weak, what NVIDIA, and then we've got an earnings report, and that's Wednesday night, NVIDIA, then Thursday we've got the government report. If we really close weak, there's a good chance that over the Thanksgiving vacation, everyone's starting to talk about the stock market and saying, what's going on? As it is, people are saying to me, what's happening with the stock market? More saying, how come it's gone so high? How did that happen? And I think there's a good chance it will make some form. It might be just a low, but not the low, but sometime around about the 28th of November, after everyone's had their Thanksgiving and discussed the stock market and got worried. But we're looking to buy. We've had some really good gains, and we've got a list of stocks that we want to get. And we're just waiting, having patience to see when we make the trough with the volatility index skyrocketing.
A little 10 days, November 28th, 10 days of more volatility potential coming down the line. Right. I love it, Basil. Thanks for the actionable information as always. Thanks again for filling in the program last Thursday. I appreciate it. We look forward to the Tiger Technicians Hour tomorrow, Basil. Have a great night.
Thank you very much, Tony.
Thank you. Folks are coming back with Tim Ward. Stay tuned.
Works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps right now, negative by 0.4%, off by 28 points. NASDAQ 100, off by 174. And right now, we're going to jump over to our man, Tim Ord, as we do every Tuesday and Thursday at half past the hour. You can reach Tim at his website, ord-oracle.com. You can check out that website, and don't forget services under the services tab at TFNN. He's got a couple of great webinars out there as well. The Secret Science of Market Tops, how to identify market tops with our man Tim Ord, and then also the 6 secret ratios every trader should know. We talk about some of those ratios here when we talk to Tim. Tim Ord, good afternoon.
Good afternoon. Good afternoon.
I haven't talked to you in a couple weeks. I was out a little bit. I know our man Basil Chapman had filled in as well. But we got some action. What do you see in this market? On the VIX, we got some action out here. We're sitting at 2384. We were just talking about the VIX with our man Basil. But, yeah, we got some action in the VIX out here. What are you seeing, Tim?
Well, actually, it's I'm actually still bullish. This is a monthly chart right now. And if you turn to actually, let me get my drawing tool here. This is a monthly chart.
Okay.
Anyhow, I'm comparing this to the October trading range. If you notice, October, you closed at a new high, and you hit a new high on higher volume. At the highest volume, actually, of, except for the volume on April, that was a down month, but the highest volume on an up month. And so, always, I don't know, I can't say always in a market. I don't know, 95% of the time, once you hit a higher high and higher volume, you always get a test of that high at a minimum, even if the market's starting a downtrend or is starting a topping pattern. The market doesn't end on high volume tops. They go up and test. If they test on lighter volume, they'll be bearish. If they test on higher volume, it's bullish. So right now, we didn't, this month's trading right now has not touched the previous highs of October. We're down. We're going. Seasonality has actually turned really bullish from now and all the way until year end. And if the market doesn't rally in this time frame, this November-December time frame, that does not bode well for 2026. So I'm not bearish. I'm actually long. I'm long that at a good price. But I think it's still at a minimum, we're going to go back up and test the October high, and the pattern I think is forming here. This is a daily chart of the SPY, and I think I drew this chart earlier today. What I'm thinking is happening here, we're drawing three drives to the top. This is the first top here. This is top number 2. We're down in this region right now, and we're going to go back up and test and make a higher high. Usually, if you get a pullback against the previous uptrend, a lot of times deep in this is over a 61.8% retracement of the previous rally up. We're close to like 80% retracement, and I'm thinking this is 3 drives to the top pattern, and volume really picked up on this last decline we had, which is not a good sign. Normally you want declines on lighter volume and you want advances on higher volume. Here we got declining on higher volume compared to what the rally was up on that previous rally up. This rally going up here was lighter volume compared to this volume going down here. So that's a clue that this is patterned to 3 drives to the top pattern. To finish this pattern off, the market would have to hit another new high. In other words, 3 drives to the top is exactly that. You make a higher high 3 times in a row. We got 2. We haven't seen the third one yet, but we got a bullish seasonality hitting. So I'm thinking we're going to rally at least into November. I'm not sure what happens after, rather we rally into Thanksgiving. And after that, I'm not sure what's going to happen. But if we hit a new high around Thanksgiving, then December could be a flat month. So we'll see how that works out. And actually, the VIX, they're getting a clue here. We're making higher highs on the S&Ps going into October. And the VIX made lower highs, or made higher lows which is kind of a bearish sign too. So the VIX is kind of sporting that idea. This may be 3 drives to the top pattern, but we should hit above the October highs. That's according to the monthly charts. And if this 3 drives top is working out to be that, then we got one more rally to go. So we'll see how that plays out. I'm not really keen on here. I'm going to skip down a little bit. A couple of charts. I'm thinking on the bigger time frames, we're actually switching assets. The equity markets had a good run over the last 3-4 years. They were in double digits. Actually, this year is still double digit and may end up double digits. But a lot of these, this is a metal market. This is the XAU market, which is the top window. Next, middle window is the, oops, didn't mean to do that. The middle window is the XAU gold ratio. There it is. This is XAU gold ratio on the monthly time. So in this chart before, what I'm thinking what's going on here, this ratio really had a sign of strength off the low. First time it's been above, RSI has been above 50 since going back to 2001, looks like. It's way back here. This is initiation of an uptrend. So this is not like just a rally and it's going to consolidate. This is a rally that's going to have actually staying power. And I think that staying power could be 12 years. The reason why it looks like there's evidence of a 12-year cycle. I don't have enough. This is the 4th time that happened. If this turns out to be a 12-year cycle, so that's not usually ideal, but I didn't have enough data going back further to see the cycle really pan out. Ideally, you need 20 times examples to see if this is really a 12-year cycle, but I think it is. So I think the next 12 years is going to be kind of a commodity-based rally along with the gold rallies. Anyhow, gold stocks that are below $1, I think are going to be great buys going forward. And I got one I'm going to present later in this podcast. But anyhow, this is, I think, a lot of money is going to go into the gold market and out of the equity market. I think the equity market is making a high. We haven't seen the final high yet, but if we go up and test the high, and we do it on lighter volume on the monthly chart, which is, I think, just a few days left in November here. I think it's less than 10 days left. And if we make a higher high above the October high on lighter volume, I think the market's in trouble. So,
yeah, gold and assets and you can't argue with the price trends right now, man. Gold having a moment. I don't know if you saw it today. Elliott Management, I think they took a position, something like 700, 800 million in Barrick, even themselves, saying split up that company, so value there. Folks, we're coming back with our man Tim Ward. We're talking some more equities, some more metals. We're coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps off by 35, NASDAQ 100 off by 208. We got a little bit of selling picking up as we're coming in. About 18 minutes to go until the closing bell. We're talking to our man Tim Ord, and don't forget, folks, you can reach Tim at his website, ord-oracle.com. There it is, right there. All right, Tim, where are we going from here?
All right, so this is the gold market, XAU. In other words, the XAU NDX. This what this chart suggests that the gold stocks will outperform the NASDAQ stocks over the next 12 years. That's in a nutshell. So that's one asset that's going to do fine. Here's another one. This is the commodity index. As the symbol is GSG, and money's going to go somewhere. I think it's going to come out of the equity market. It's going to go into the gold market. Both markets may go up. What I'm saying is the gold market will go up faster than the equity market. That's because of this chart here. In other words, it's a ratio between the XAU and the NDX. If this ratio is rising, that says XAU is outperforming NDX. Both indexes could be up, but the XAU is outperforming index. That's the reason why the RSI will stay above 50. So it's a momentum type indicator. This is another chart that is like I said, it's a commodity index. It's like oils, the grains, metals, including gold, industrial metals. And I think what's going on here is a cup and handle pattern. I drew this cup right there, and here's the handle right there. And it only has retraced 38.2% of the rally. This is a monthly chart. The chart goes back to 2009. But it rallied off the 2020 COVID crash, rallied off that COVID crash up to the 2022 high. And since 2022, it's just pretty much gone sideways. And now the Bollinger Bands are starting to really pinch here. And the volume compared to the down volume, the up volume is just really exceeding. The green is the up volume, the red's the down volume. And over the last several months, actually going back to even early 2025 here, most of those bars are green, showing there's just like a persistent buying. Breakout is right around pretty close where we are right now, around the 23 range. And to get through that line, you'll need to see a sign of strength. A sign of strength, that means you're going to see a pop in volume, probably shortly. Maybe it's not this year because it's a monthly chart, but I bet it does sometime, if not late this year. Well, we're already late this year, but it could do it any time. It could be doing this month, possibly next month, if not, first part of next year. But I bet you see a sign of strength fairly short term, and that's another this actually inflationary. That kind of supports the idea that gold is going to rally more from here. But once this chart goes sideways and only retraces 38.2% of the previous rally, that predicts the market is, at a minimum, is at the halfway point of the next move up. So if you kind of double that, you come up with around 44, give or take, and you're probably going to go back up to at least this high here, which is 40 area. It predicts a little less than that, but I think that's where we're going to go. Possibly this last impulse wave lasted about 2 years. This next impulse wave could last, maybe 2 years. So next year and possibly the year after. So we'll see how that works out. But I think that's where the money's going to go. There's always a bull market somewhere, and you got to find where those bull markets are going to be. One's gold, and I think, and the other one is going to be the commodity markets. So this is a good place for it. And got a little time on a short-term basis here. We'll take a look at what the XAU I think is doing. I think we're going to end in a trading range here. We jumped above this is GDX on a daily time frame. You can't quite see it, but this is a short-term view. I think we're going to go back up the 84 range, and I think that 84 range is probably going to have a little bit of trouble. I don't think we're going to get through it. I think we're going to come back up and actually possibly go back down again and create a trading range between 84 to possibly 70. This is good. Trade ranges are good. This is not a top of any consequence, but the market has really gone up since 2024. All of 2024 and most of 2025 is due for a rest. So I think this is just a sideways consolidation for, I don't know, not real long, maybe till March. I don't know, but just a sideways move. Nothing big to the downside, just a trading range between 70 to 84. Here's kind of a view. This is the monthly GDX. We got way above the upper Bollinger Band previous times when we did that. It's here and here we consolidate. Here we consolidate for years. I don't think that's going to happen. I think character market has changed. But I do think we may bounce around between 85 to 70 for the next several months. We're going to have a hard time getting through the last high on a monthly chart. We had 364 million shares. So if we test that high on, say, 600 million shares, that would be resistance, because if you test the previous high on a lighter volume, it's going to turn into resistance. So, but if we hit that, if we hit the previous high on higher volume than 364, that would be bullish. But we had a heck of a run. We started off at 25, we went up to 85. So it's at some point we're going to consolidate, and it would make sense if we do it now. So I'm not bearish at all, but I think we're going to hit a little bit of a wall, and so that means what to invest in. Well, I've been kind of going through a bunch of different charts. There's a bunch of them out there. They're all low-priced issues here. Here's another one I found. This is the monthly. It's Nova Resources, and actually, I know a little bit about this stock. It's actually, there's another mine. This mine did not find gold, but it was next to a mine that did find a massive gold reserve, and they're right next to it. So I think there's potential for this one to go. We did have a sign of strength, which is right there. That was the highest volume going back to 2022. And we busted through the mid-Bollinger Band. This is a monthly chart. You have to have a sign of strength through the mid-Bollinger Band on a monthly chart. If you do, that's a buy signal. We got actually continuation the next month. We even went higher volume, pushing high. Then you hit the upper Bollinger Band, kind of backed off. But if you notice, the Bollinger Bands are squeezing here, and that suggests volatility is going to change direction. Previous has been down. Obviously, the Bollinger Band squeeze will now predict it will be up. So this is actually a good value. I think on a bigger time frame, it's 9 cents area as of today. Where can it go to? Don't know. But it's in a buy area. It's a little bit better buyer than last month. Month has got up to about 12.5 cents. So it consolidated down a little bit. I think it's early in the stages. So this is the one to watch. So.
And it would make sense at these market prices, man. I appreciate the breakdown, of course. I agree with a lot of what you said. It would make sense at these equity prices. Maybe even just diversify a bit to some degree, and not diversify, but whether you talk about storing some of that value as the S&P's hit almost 7,000. Tim, thanks so much, man. We look forward to talking to you on Thursday. You have a great couple days, man.
All right, thank you. All right,
thanks so much. Folks, we're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out, like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps right now, negative by 0.6%, trading off 41 points at 66.50. Lows of the session earlier, 65.94. NASDAQ 100, we're down by almost 1%, down 240 points right now, 24,634. The Dow off 0.9%. 427 points in the red, 46,239, and the Russell in the positive right now. You jump to Home Depot trading lower on their numbers. You're hitting session lows right now, down by 5.9%. And yeah, it was a pretty big miss, a miss on the forecast. And they had a number of issues that they cited. Lowe's down 2.3%. Amazon taking it on the chin, down 4.2% right now. Microsoft down 2.6%. Meta wins their antitrust suit. You're down by 0.6%. And NVIDIA has their numbers tomorrow, down by 2.5% ahead of that. Jump over to Tesla, down by 1.6%. Now you jump over to, some of the consumer stocks, we were higher, but even they've given it up. Walmart now down by 1.3%. Look at the selling coming. There's a 5-minute bars. Did over 400,000 shares a few minutes ago on Walmart. Walmart down 1.4%. Target in the green by 0.3% right now. TJX up by 0.6%. Procter & Gamble up by 1% right now. You jump over that VIX, 2403 on the volatility index right now. We jump over to gold, down $4. And you talk about some volatility, man. And we got two-way volatility in this market. I think we're going to have it for some time. There's a lot of unknowns right now this market's fighting through, whether it's we don't even have the data that we've been used to. You have a Fed, that December 10th meeting, it's almost a 50-50 right now. Okay, wherever the odds are. We're going to have a new Fed chair in. We get NVIDIA earnings tomorrow. They rung that $5 trillion bell, and they rung it twice. And then we've sold off from then. NVIDIA shares, we're down $30 from those highs. That's $750 billion of market cap coming into their earnings. All right, folks. Thanks so much for tuning in, spending your afternoon right here with me. Have a great night. Have a safe night. I'll see you tomorrow morning for the morning market kickoff, 9 a.m. Eastern time, right here on Tiger TV. Have a great one.